Good morning, traders. A very, very happy Friday and welcome to another edition of Technical Talk. My name's Aaron Hill and time is now 8:48 a.m. GMT. So the big news yesterday, of course, was the release of the US Consumer Price Index for January. As you can see, for January alone, inflation increased by 0.6%, slightly above the consensus forecast of 0.5%. However, the 7.5% year-on-year inflation figure in January and the core reading of 6%, the core reading excludes volatile food and energy. This also rose by 6% year-on-year. Both were well above the expectations and did initially rattle the financial markets, sending the dollar higher and US Treasury yields higher across the curve. Most notably, the benchmark 10-year note punctured the 2% mark, reaching highs not seen since August of 2019. And of course, the 2-year note rallying 22 basis points and reaching a high of 1.64%. Right. Overnight in the financial markets, leading Asia Pac indices saw South Korea's Kospi drop 0.9% and Australia's ASX 200 drop 1%. Now, do note Japanese banks were closed in observance of National Foundation Day. In early European hours, we have we're clearly lower across the board, echoing a risk-off tone. Now, the FTSE's 100 out of London is currently down by 0.8%. The DAX 40 out of Germany is down 0.8%, and France's CAC 40 is down by 1%. Now, the Euro Stoxx 50 is also down by 1.1%. Now, in support of the risk-off vibe, safe haven currencies, namely the Japanese yen and Swiss franc, are mostly higher. And unsurprisingly, the Aussie dollar Aussie dollar and New Zealand dollar, both risk-sensitive currencies, are mostly underwater this morning. So the Aussie dollar currently trades at 71.35 and is down by 0.4%. Now the New Zealand dollar, New Zealand dollar against the US dollar is down by 0.2% and currently trades at 66.55. Now, on the charts this morning for the euro dollar, this is the weekly time frame and the daily time frame. As you can see from the weekly resistance area at 1473, 1583, we are seeing some form of selling. This should not really come as a surprise as the immediate trend on the weekly scale is to the downside and has been since the beginning of 2021. In addition to this, we have seen the 14th of January high at 1483 take hold and welcome sellers in recent trading. As you can see, we did fall lower in recent trading and are close to the support area at 1369, 1309 on the daily time frame. Do note this area also intersects with a trend line resistance turn support taken from around the high of the 26th of May high at 2263-ish. Now onto the shorter term time frames. This is the H1 time frame. The bullish pennant pattern is looking rather frail at the moment. We did get a breakout to the upside and we did get a forceful push to highs of 1495. But as you can see, this is the 61.8% Fibonacci, the green line, the 61.8% Fibonacci retracement ratio at 1475 has once again capped upside attempts. Now, we do have support at 1386, 1355 in play. Whether this is enough to hold back sellers is difficult to say, as on the H1 timeframe, we have ultimately sellers have mustered enough strength to conquer the 114, I believe, 114 figure, and is poised to actually retest the underside of this level. Now, do take note of the Quasimodo resistance turn support on the H1 time frame at 1365. Basically, what I'm looking for at the moment is the 114 figure to offer some form of ceiling for a short-term dip back to the, as I said, the H1 timeframes, Quasimodo resistance turn support at 1365, which interestingly aligns with the upper edge of this daily support area at 1369. Onto the Aussie dollar, it's mainly short-term I'm focusing on right now. I did highlight this possible harmonic bat PRZ between the defining Fibonacci retracement of 88.6% at 72.74 and the 1.618%. I believe this is the Fibonacci extension at 72.41. So this is a potential. It's not a potential. It's a back pattern PRZ. As you can see, price did react forcefully from this area yesterday and has continued lower. Now, in terms of take profit targets from a harmonic situation, generally what I look for are the Fibonacci retracements, the 38.2% and the 61.8%. Now we have actually, and this is derived from the legs A to D of the pattern. So we have actually conquered the 38.2% Fibonacci retracement. Let me just throw that on the chart so we can all see. We have actually come below this recently, and that comes in at around 71.42. The next take profit target for me would be around the 74-ish region with a possible dip into the support area at 70.46, 70.23. So do be aware of this. Now, in line with this, on the H1 timeframe, we have recently conquered a decision point at 71.42, 71.51, and is on the verge of being retested as resistance. Now, if this area holds here, this adds weight to the possibility of the H4 targeting lower levels. Now, should we hold here, then I'll be looking at the 71 figure with a possibility of a break, looking at support from 70.42. Finally, guys, on to the dollar yen. Now, I did highlight in yesterday's analysis that there is considerable resistance in this market right now, despite this currency pair decisively trending higher since 2021. So the H1 time frames, 100% Fibonacci projection came into view on yesterday at 116.20. This, alongside the daily time frames Quasimodo resistance at 116.33, I believe, 116.33, and the weekly time frames 1.272% Fibonacci projection at 116.09, alongside H4 AB equals CD structure marked by the black arrows. Again, all this is simply 100% Fibonacci projection. And as you can see, this converges with the daily Quasimodo resistance here. Now, it is, excuse me, it is worth noting that the double bottom pattern on the daily time frame that formed around the 113.50-ish region does have a take profit target of around the 116.63 region, just plotted just above the Quasimodo resistance. So do be aware of this. This could hit today and complete the double top pattern we've been watching since around late January. So yeah, do be aware of that. Okay, so that's a wrap from this side. Feel free to send the team any comments or suggestions to marketanalyst@fpmarkets.com, or alternatively to the support desk at support@fpmarkets. Thanks for joining. Have a lovely weekend, and I will be back Monday morning as we open in London. Thanks so much.